Hey traders, it's October 23rd and it's time for my weekly video. I'm going to try something a little bit different today. I'm doing this recording during market hours because the market has been dull. That kind of leads us into the next topic of conversation, which is how do we make money when it's like this? The best strategy right now is to sell out of the money bullish put spreads. That's what we're going to be focusing on. Got some out of the money call spreads that we're going to take a look at as well. Post earnings, love these plays. These stocks have momentum, so we can use that. We can lean on resistance levels for bearish call spreads. We can lean on support for bullish put spreads. So let's take a look at what the market's doing currently. So we've got this double top formation that's a little bit daunting. Big resistance up here, and the market's not quite been able to get up to it, although it was able to break through this downward sloping trend line right here. So this is positive that we've been able to move higher, but look, we've got doji, 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 these very, very little bodies on these candles signify equilibrium. There's really nothing going on during the day. You can see that the trading volume is low, so the level of conviction is low. And that really means that when we get down to these big support levels, there are buyers. They come in, they scoop the stocks right up. That's why we've got these long tails under body here. Sign of major support building here around the 200-day moving average. We have a secondary support level right here at about 294. Let's call it at the 100-day moving average. And then we've got resistance right up here at the all-time high. So the market's been trapped in this range pretty much for the last 5 or 6 months. There's been nothing going on. Anytime we get a pullback to support, we want to aggressively be buyers. Anytime we get up towards resistance, the market can float around there for a while, so we can't aggressively buy puts or sell short. And when the drops come, they come in a big hurry. You can see in between we've got these long green candles, so it's pretty tough to short as well. But once we get that downward momentum, we get some trend lines that are broken, it does tend to continue in that direction. I'm very neutral in here. I think that the China trade news is good. China has stepped forward with grain purchases, and everyone's talking about a mid-November mini trade deal. It's more of a truce, but it doesn't matter because the market just doesn't want this to escalate. So it's happy right now. It's within striking distance of the all-time high, even with all the tariffs that have been imposed. So consumers aren't feeling the pinch because of the yuan devaluation. That's good. The U.S. government's raking in billions in tax revenues. That's good. So the trade deal doesn't really matter. Brexit, we've got some positive developments on that front. For the first time, Parliament has passed an agreement. It's just the timeline that's in question right now. So hopefully they'll be able to figure out how to gracefully exit the EU, and then that uncertainty will also lift. So I'm seeing a pretty good picture for us into year end. We've got the FOMC next Wednesday, a week from today. In fact, right now, the FOMC will be released, and we'll see what happens. In general, even if we get a knee-jerk reaction lower because the Fed is not quite as dovish as the market would like, that's going to be a buying opportunity for us because they are going to ease sooner or later. So I'm hoping for a pullback because I'd like to get a little bit more aggressive with my long positions. If the Fed comes out and paints a nice dovish picture for a November, December rate cut, well, then I think the market could come up and challenge the all-time high, and it might even push through it. So really kind of a pivot point for us next week. We're going to try and see if we can sell some out-of-the-money bullish put spreads on strong stocks. We might have a few bearish call spreads we can sell as well. Make sure to monitor those positions during the FOMC meeting next week. If you've got some nice profits in it and some time decay has come out of them, pare your positions back a little bit. Let's see what happens with that whole announcement. Then you can always go back in. So before I get into individual stock trades, I'd like to mention that everything that you see available is available on Option Stalker. Please go to www.oneoption.com. Fantastic trading platform. Many of you may be watching this video 3 days or so after it's been posted. If you like it, please subscribe to this YouTube channel. I'm going to be posting daily videos every single day in the morning, about an hour after the open. Lots of actionable trades. They've done excellent. So please subscribe to the YouTube channel, and by all means, if you like the content, please give it a thumbs up. That way I know I'm doing my job. So again, everything's available at www.oneoption.com. Option Stalker finds the best stocks, and it also includes all the market research that I'm currently going over as well. This weekly video is part of Option Stalker. So I've gone through the searches, and I've already cheated. I've developed my list, and I'm going to run through some of the searches that I used to get to these candidates. So I'm going to click on Scanner, I'm going to go to Bullish, and I'm going to make my normal run through these. And I'm looking for after earnings. Didn't see anything that I liked there. These would be strong stocks after earnings if they reported yesterday after the close or today before the open. Heavy buying. I'm going to scan through this to see if this is picking up any of the stocks that I highlighted. No, but these stocks are also excellent candidates because they have heavy option volume, heavy stock volume. They're above the prior day's high. So, and all very good qualifications, especially early in the day. I love this search. Now, I do see a couple of things on the list: SLB, BP, HAL. These are all energy stocks, and we have had some energy stocks report like SLB, and the reaction has been positive. So just kind of keep that in mind, because there is one of our picks that we're going to be looking at that's in the energy sector. Nothing too much going on relative strength. I can take off. I had these filters clicked so that you needed to have a buy signal on H1 or H2. So if I want to be more restrictive, I can add those. And so I clicked through this list, and nothing really jumped out at me as great for a bullish put spread. So I'm going to continue to go down and look for pop bull. And I'm just going to scan through. There's one. Car is going to be on our list, but it came up on a few other lists. I like this because you can see this cup and handle formation. We've broken through horizontal resistance. We've gotten through the 100-day moving average. This is a new feature that I added. If you hover over the last bar, actually it's the E after the last bar, you'll see the next earnings release date, which is 10/31. So there's a little bit of time for it to continue to move higher. After earnings, there's not enough time for us to do a bullish put spread on this one because we only have a couple days till expiration this Friday, and then it reports a week from now. So we're going to continue to go down the list. Didn't see a whole lot here. I'm going to go into strong after earnings, and I did pick up a couple of stocks here. You can see this list is so dang good. It's so dang good. It looks back at stocks that have reported earnings recently in the last 2 weeks. It looks for these gaps up, and it looks for that gap to have been maintained. Well, it may not look great the day of earnings after the stock releases, but in a day or two, you start to see movement in one direction, then you know the buyers are lined up for it. In this particular case, you had really big rally, little pullback to the middle of that candle, which is pretty typical. This is oftentimes where we try and enter a trade, and then boom, boom, boom. Little grind higher, really, really nice, but that train has left the station. So I don't have any interest in it once it's that far gone. But I'm going to continue to go down the list, and there's one I really like. There's your earnings reaction. Yes, we had a nice move off of it. We've been able to get through this 100-day and 200-day moving average. UNH I like as a bullish put spread candidate. Sell that spread below the 200-day moving average. Use that as your stop. If you want to be a little bit more conservative, you can go down to that $240 strike and sell out of the money options there. I do like it though. Going to continue to look down this list. CCK, very nice. You can see a breakout through horizontal resistance right here. I'd like to see a little bit of a pullback and sell that 67 put. That's where I would try and put this spread on. You've got a lot of tails above body. That's a sign of resistance. It's not a good sign for the stock. It's a sign that it may pull back a little bit more. So I would be patient with CCK, but I do like it. Going to continue to scan down the list and see if there was anything that I liked. Yes, there was PM. I like this as well. There's your earnings before the open. There's the B. And we're above the 200-day moving average. So I like selling that 200-day moving average. Again, you could be a little bit more conservative and sell the 100-day moving average. That will work also. Continue to look down. Ah, yes, there's another one I like. KSU. Nice big, look at that compression. Tight, tight compression. Stock pulls back and then bloom. Right through that compression. This open should hold right here. That $140 level, that's where I'd want to sell the put. We're $5 away, so you may need a little bit more of a pullback to get a decent premium for it, but I like selling that 140, maybe 137.50 bullish put spread. This is a nice move. Big volume, good relative strength. Really like KSU, so I found this one on this search as well. And I'm going to continue to look down. Didn't see anything else that I really liked. PII was too far above. That's got to pull back. Hog, it's really floundered around for a long time. I like this gap right here, but I just don't trust this stock because it's been really choppy. So I'm going to go into the bearish list, and I'm going to look at week after earnings. And I'm going to click on the first one. And lo and behold, I get this week after earnings. There's the earnings reaction. Stock closes down, but I actually view this as positive because I love this breakout right here, and the stock is retracing back to the breakout. This is where I would sell my bullish put spread. So this actually makes the list on the bullish side, and the reason that it sold off after earnings is because it had gapped up so much before earnings, but this still is a nice compression. The stocks had good price action, so I would key off of this price level right here, which is about $250. I'd want to see this breakout hold right here. So this 252 level, I want to see it hold, and then I would sell a 250 put, maybe buy a 248. You can judge when you start looking at the option premiums which strike price makes the most sense. I'm going to continue to look down. IBM, oh my gosh, I didn't even look at our trades from last week. So I'm going to have to do that when I conclude. I always start with that, and I've overlooked it. So in any case, when I recorded this last week, I said, hey, IBM reported bad earnings after the close, and the stock is poised to sell off. I like selling this bearish call spread around the 200-day moving average. If you did that, your bearish call spread is in fantastic shape with only a couple days left till expiration. And if you did it close to the open, you would have collected some nice premium while it was still closer to that strike price and the implied volatilities were higher. So that is a really nice one. And I've got another one that I found on this search, and that is UPS. There's another new feature I'm going to show you how to use. Man, is it effective. I've been using it like crazy to day trade, and it's so good for entering and exiting positions. So here's how you use it. You click on GTC Alert. I'm going to use GTC because we're swing trading, so some of these alert lines are going to be longer term in nature. So when I see something attractive, I click Alert, or I click the GTC. I go to the candle where I want to start the downtrend. And now all I have to do is go to the end candle and click it, and I've got my downtrend line. When this is breached, I'm going to get a pop-up. It's going to tell me, hey, you placed a alert on this and it's violated that trend line. You need to take action. So in this particular case, I would be using this alert line to exit my UPS bearish call spread position. And so yes, I do like this on a bearish basis. You can also see here that the stock has broken this little uptrend, and you can also see that it's likely to come down and challenge this major horizontal support at the 100-day moving average, and it's currently got some relative weakness. So the reaction after the earnings announcement was a gap down, way down, touched that 100-day, and then rallied up through the course of the day, and now we're starting to see a little bit more selling come in. So yes, I do like this one for a bearish call spread. So that's what I found just going into the strong after earnings and weak after earnings searches. So then I flipped gears and I went into another search, and I thought, I'm going to take a look at the custom search here, and I'll show you what I configured on the bearish side. It didn't really require much. I was looking for a stock that had announced earnings in the last few weeks, had good option liquidity, and was on a sell signal. So nothing fancy, nothing big here. Ran the scan. Those are the ran the search. These are the symbols that came up, and I picked up a couple of other stocks in this search. So I'm going to go through them. I'm going to bring that off screen. Boeing. Boeing opened today and it just took off because it's been selling off hard. Well, look at that bearish price action. First of all, lots of bad news hitting Boeing right now. That's why we've seen that heavy selling. And so here's how I would play Boeing. That is resistance, that opening price today, and it almost matches the close here. But we'll use the opening price, 345. That's the short strike price that we want to use for this bearish call spread. And we'll take a look at the price action today. From that open, you get a violation of that opening price. And look what's happened since. Sell, 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 sell. So I like selling, and that's our stop right there if the stock gets back above that 345 strike, and that's the strike price that I would try to key off of as well. And the stock right now is at 338, so you should be able to get some decent premium if you go out into the November expiration on that one. So yes, that definitely looks good. And I also, on this list, picked up Netflix as a good bearish call spread candidate. We just see a little bit of selling right here. I've been following the stock today. After the close, the stock announced big gap up, but then it reversed the entire day. That's a failed breakout right there. Heavy selling. This stock is going to continue to move down, and our stop is right there on that open, which is 289, and that's also where you'd want to have your short strike prices around that 289, 290 level. Our premise is that the stock will not be able to get through this resistance level now. And so we do need to have a little bit of a bounce right now. We've got Netflix at 270. So if we're going to be going up to the 290 strike, we need about a 10-point pop, which the stock makes 10-point moves all the time. So on any bounce, start getting close to it. Yes, I like Netflix for that bearish call spread. Now I'm going to go in and stick with the bearish side for a moment, and I'm going to click on bearish trade signal across a multitude of fronts here, and I'm going to take my earnings date off, and I'm going to see all sorts of stocks in here that might be poised for a good trade, and I'm going to take this off screen. And I've got BYND has been a really good short. We've been short this for the last few weeks, constantly on a day trading basis. Really like that one. And Starbucks, very weak. Breakdown through horizontal support. Really good looking bearish trade. Let's say that you shorted this stock. Okay, so I shorted it. I'm swing trading it. I can't watch the market all the time. Well, what can I do? GTC. Click on the candle. Click on the candle. Now you've got your stop outline. As the stock continues to drop down, the line continues to drop down. It's like a trailing stop order. Now in this particular case, I probably would set a target at that 200-day moving average. Put a bid out there, see if you can buy it at the 200-day moving average. But this line will also help you because when you log into the computer, if you see a pop-up saying, hey, Starbucks breached that alert line, you might know that it's time to take profits on the trade. So in any case, those were some of the bearish stocks that I saw in that search. So I've gone through UPS, Netflix, Boeing, and today I looked at a after earnings search, and I found Snap. There's your price action yesterday. Opens on the high, closes on the low. Announcement after the close. Couldn't get through the 100-day moving average. Pretty steady selling here. There's your reaction to the earnings. Not good. So Snap, you can use that opening price today as your short strike price, which it's $13.91. Let's call it $14. That would be your short strike. Yes, I think this stock continues to drift lower. So that's what we've got on the short side. I'm going to just recap that real quick. Bearish call spreads, UPS, SNAP, Netflix, Boeing. I think all of those are primed for bearish call spreads. Well, what about the market? Right now the market's very neutral. I don't see it moving a whole lot one way or the other. So I'm not too worried about it. I think we're going to have some pretty flat trading with a slightly bullish bias. So I probably would weight my my bearish call spreads lighter than my bullish put spreads. I would be more slanted to the bullish side. So let's go and take a look and see what we've got there. I have a search that I'd like to run. Again, nothing too incredibly difficult here. I'm going to go look for strength on the SPY across multiple time frames. So I'm going to be looking for it across a daily, 4-hour, 2-hour, 1-hour, good option liquidity. Lots of stocks to take a look at here. But I also want to make sure that I don't have earnings coming up. So what I did was I just flipped through all these stocks. Took me probably 10 minutes to look through this list. I could narrow it further if I wanted to, but I'm going to cut to the quick. The stocks that I found on the list, AMTD I liked. I like BBBY. I liked KO. We're going to look at each one of these. I like PBR. I'd mentioned energy stocks. I like PBR. I like UNH. And so those were most of the other stocks that I have in my bullish put spread list. And so let's take a look at each one of these. And we'll go through the list. In fact, I've just given you the list. So before I go and look at our stocks for this week, bullish and bearish, let's see how last week's stocks did. So I'm going to go into lists and I'm going to click on October 16th. And so last week I'd mentioned to you that the market, pretty much similar to this week, we had this nice downtrend breakout to the upside. That's where we had our video on the October 16th. I said I'm looking for the market to be pretty flat this week, maybe a slightly bullish bias. Well, there you go. We're a little bit higher than we were, but not much else going. So that's why we're going to focus on selling out of the money bullish put spreads. Market's not going anywhere. Volume light. We're going to try and take advantage of time decay. And so these were our candidates. So most of them we were selling bullish put spreads below major technical support. CI, we're leaning on that 200-day moving average. Actually, CI, we're leaning on the 100-day moving average. We're back down here. That's where the video came out. We're leaning on that 100-day. Look at what the stock did. This is phenomenal. That would have been just a great outright buy. And I have highlighted it day after day in our daily video because it keeps coming up on the searches. So Really nice one. CVS, there's the 16th. There's our breakout. That was our stop out point right there. That's also where we wanted to have the short strike. Here's what it's done in the last week. A whole lot of nothing, which is perfect for selling out of the money bullish put spreads. GME. There's the 16th. We wanted to sell bullish put spreads right at that $5.50 strike price. We're still very close to it. And our reasoning was that it was breaking out through horizontal resistance. Well, it's been a really nice play for us. The stock has continued to move higher. It's going our way. In fact, stock is up to almost $6.50. Nice one. IBM, I showed you earlier. That's the reaction. We knew it was going to be down because we could see the stock trading lower after hours. That was a bearish call spread that we were going to be selling at that strike price. Nice one. Should be expiring in 2 days. Should be an excellent trade for you. Uh-oh. Here's our dog. And it was a dog. We had J&J right here. I love the pop above the major moving averages. The next day, everything is looking fantastic. We're leaning on these major moving averages to sell our bearish, or excuse me, our bullish put spread. And look what happens. Yikes. The bottom fell out. What happened? Well, we took a max loss on that one. You could actually just hang on to the trade at this point, but because it doesn't matter, you go through auto exercise and assignment. But what happened was Johnson & Johnson came out and they said that they have a bunch of asbestos in their product right now, so they're dealing with lawsuits in the last few years. It sounds like they're going to have some more lawsuits coming up because they had to recall a bunch of their product. So the stock absolutely tanked on the news. Couldn't see it coming. They had actually gotten through litigation here. That's another reason that this stock was rallying. So it looked like perhaps the worst of the news was over. And that was another reason that the spread looked good. Folks, we're going to have losers from time to time. That's just the way it is. So this one was a loser. Tesla, selling an out of the money bullish put spread. We were going to be leaning on this breakout right here. And that opening price right there, it's a volatile stock, so we wanted to give ourselves some distance. And the stock was up here when we did that. Yes, you should still be in fine shape. In fact, tail under body, tail under body, tail under body. They announce after the close today, so you should be buying this spread back in. You should have had some nice time decay in the last week. So Tesla, also good. And finally, UAL. UAL, we had that nice reaction to earnings right there. And we were going to be selling a bullish put spread below the 100-day moving average. Stock has been able to hold water. That spread is in great shape. So we had 1, 2, 3, 4, 5, 6, 7 trades last week. 6 winners, 1 loser. Sorry about J&J. Couldn't see it coming. So let's hope that we have the same success this week. I've actually got more picks, so you'll be able to track relative strength and really monitor some of these stocks for a bit. AMTD. Here's your game plan for AMTD. I like the fact that the stock has been able to get through this opening price right here. That was resistance. You had earnings after the close. You can see a positive reaction to it. So I would sell that bullish put spread using that opening price, which is about $37.50. So that also is your stop at that $37.50 level. You can see you've got a nice upward trend line here. You can also take and drop a GTC alert line right here. We'll use that. We'll use that bar. It'll auto extend. That way it'll continue to track the stock higher. Let's say you're making money, you're making money, you're making money. You get an alert that it's breached that support. Okay, maybe it's time to reel in that bullish put spread. I've made enough money on it. These alerts are awesome. And if you have a really nice tight trend like this, you come in. I can't do it here because we're already through the price point. You click on that. Click on that, drop your line. When it's violated, you'll get your pop-up window. ASML. ASML is a bullish pick. We like this breakout right here, and we would lean on that $252 level. I'd like to see it get above this opening price right here from yesterday. So if it can get through that 258 level, 259 level, I like this even better. So we would sell that 252 strike, ASML, bullish put spread. Boeing, bearish call spread. We're going to be leveraging that open price. 345 is your short strike price. I like that. I think it's going to continue to move lower. Very negative reaction to earnings. You'll notice that usually I've got a bunch of caveats. If the market does this, if the market does that, we're far enough out of the money on these stocks that time decay should work its magic, and we're in relative weakness or relative strength after earnings. That should continue. BBBY, there's your earnings announcement. There's your gap up right there. It's through the 200-day moving average. I like selling a bullish put spread below that 200-day moving average, which is right around the $13 level. Stock pulls back below it, you stop out. We're leaning on these major support levels, and that's also our stop out point. CAR, 1, 2, cup and handle formation, breakout. I think this stock you can just get long, just buy the stock. You can try and buy some calls on it as well, but you can't really effectively do a bullish put spread because the stock is going to be posting earnings in about a week or so. CCK looks really good. I like this breakout right here. That's what I would use. I would lean on that at the $67 level. That's where I'd want to sell that bullish put spread. Let the stock maybe come in a little bit if you can. Got tails on top. It's a sign that the stock might be pulling in, coming back in a little bit. So be patient on that one. But I like trying to get long on that breakout. Here we've got KO. You can see nice earnings reaction. Stock pulls back, tries to fill in that earnings gap. It does. We've got a nice little uptrend here. We've got the 100-day moving average that we can lean on, and that's at 53.20. So that would be my short strike price. I would expect all these support levels to hold up. I would also expect that little trend to hold as well, and you can always drop that just as your safety net to make sure that things are moving the right way. KSU, love this opening price here. I would expect that gap to hold. That open was $141. Love the compression here. Love the big volume. Love the relative strength. Any pullback on this stock that we can get closer to that $141 level, the better. You could even use the 140 strike price. Yes, I like selling a bullish put spread on that. If it trades below 140, you got to shut her down. Netflix, bearish call spread. Here we want to leverage that opening price right there, which is 290, and the stock is going to need to rally up to about 280 for us to get any decent premium on it. So it's got to move our way before we're willing to do it. Otherwise, we're just not getting enough premium in it right here. And you can see there's a bit of a trend line right here that's been established. So that also would be nice if that were breached. And I'll show it to you right there. It actually would extend back here. So we get a little pop, sell that bearish call spread, and then we'd love to see this trend line right here get breached. These are all post earnings, so we don't have to worry about that. Here we've got PBR, another cup and handle formation through the 200-day moving average. I like selling that $15 strike price. I don't think it has a 15.25 strike, so I think 15 is about as good as you'll be able to do on it. And this should hold because this is a breakout on this cup and handle formation. Really nice chart there. And earnings, excuse me, let me look at that. Earnings are on 11.6, so you got time to at least get one of these in. Philip Morris, PM, very nice. There's your earnings. I would sit on that 200-day moving average, try and collect some premium. You can also go down to the $100 strike price on this one. Either will work, but if you do sell the 100, I would close it down if the stock goes below the 200 day. So, but this is a nice gap up here on earnings. I just don't think you're going to get much premium on it. That's why you're going to have to go a little bit closer to the money. Snap, didn't like the earnings reaction here. It's been in a steady downtrend. So we're going to use the opening price today. That $14 strike is the one that you want to be short. And if the stock moves up through it, you got to shut her down. But I believe we're going to see a steady drift down to this 200-day moving average. UNH, we love, like selling that 200-day, like selling the 100-day for more passive traders. That 240 strike looks good, but you may not get a lot of premium. You might have to go up to the 245 strike. Right now, premiums are starting to collapse. If you look at the VIX, very, very low premium scenario right now. Light volume, market trapped in a range. UPS, I like this short. We drew that trend line. So we've got earnings, reaction, negative. Stock does rally up, tries to fill the gap, can't do it, negative today. I like selling a bearish call spread using that 118 level. And if the stock gets above this opening right here, you got to shut her down. But I think we're going to see the stock drift down to this 100-day moving average and test that level. So you've got plenty of time to get a nice bearish call spread in for the next week or so. You have to be careful going into the FOMC meeting next week. I'm expecting some fairly dovish remarks. They'll probably say, look, the economy right now, yes, we're seeing some signs of softening. We're not overly concerned just yet, but as the data points start to mount, yes, we'll look to ease. We might even be easing in 2019. That's the kind of rhetoric that the market is going to like. The market's not going to like anything that suggests that they won't have to lower rates this year. It won't like that. But I think there's more of a chance for the reaction to be kind of neutral, meaning that we hang right around this level. Maybe we pull back a little bit and then we kind of wait for the next FOMC meeting. Things are stuck right here. Long term, lots of uncertainty pulled out of the market with a possible US-China trade mini deal, and you've also got Brexit heading in the right direction. That's less uncertainty. We've got the Fed ready to ease if needed. Earnings have been decent so far, better than feared. So everything looks pretty positive. I really see us maintaining support probably around the SPY 297 level or so. Got the 100-day moving average kind of coming up. So 296, 297 support level should hold. I also see that without a Brexit deal, this resistance is also going to hold around the 302 area. Let's sell some premium while we wait. That's the name of the game. We got a lot of stocks to take a look at next week. All of these picks that we just went through right now, these should keep you busy. So look to sell these premiums whenever possible, and we will see you next week. Again, if you're watching this video on YouTube, you're probably seeing it a few days late. Please give it a thumbs up if you like the content. Please subscribe to the YouTube channel because my daily videos I will be posting every morning an hour after the open. Thank you. Good luck trading.